Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Wednesday. In today's program, I want to talk about the Bank of England and how they are completely, in some ways, confusing in the market and beginning to lose credibility. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out the way, let's try that again. With that out the way, let's get started. Right. Anywho, so the Bank of England has really sort of confused the market a little bit. In some ways they haven't, in some ways they have. And anyway, what they've said recently at the last 24 hours has really kept the markets on the edge, and the market is really focused now, obviously, on UK bonds and the sterling. Because basically what happened last night is the Bank of England Governor, Andrew Bailey, he warned pension funds that there will be no extension to the October the 13th deadline. Don't forget, the deadline for the emergency bond purchasing program, which they're doing to prop up the market, has always said they will end on the 14th. And there was a little bit of hope, especially with the cases that the banks intervened twice so far this week by buying more bonds, that they might even extend the program. But basically what Bailey said is, you've got 3 days left now and you've got to sort it out. You've got 3 days left now and you've got to sort it out. However, there was a conflicting report released today in the Financial Times, and this is probably from other BOE members who are apparently privately telling banks and investors they will continue the program privately. But there's always a but. There's always a but. But another Bank of England spokesman today has said and has confirmed today that the bond buying program will end this Friday. So you have private chat going on, apparently, according to the Financial Times. Bailey saying enough's enough, got to sort it out. And another spokesman saying this will definitely end it. But the market, I think, is confused. I think it's like a case of the market thinks it's bigger than the Bank of England. Because in many ways, I think the Bank of England is losing its credibility. I mean, Liz Truss's government, she's already lost the credibility. And now it looks like the Bank of England is losing credibility because there is a lot of confusion about whether or not they will end the bond program and how the bonds will handle this after it stops on the 14th. But like I say, I really think they're losing credibility, and I'm not the only one. The Swissquote Bank, they said all the BOE efforts have gone up in smoke. What Bailey did was certainly one of the biggest communication mistakes that a central banker could make. So in general, like I said, I really think he's right. And they actually said, and it really came at the most unfortunate time. I mean, this is the time when you need stability. You need confidence in your central bank. Okay, you need to be reassured that the central bank knows what it's doing. It has a plan of action. But at the moment, it does seem that there is conflicting reports, a lot of confusion. And like I said, I really do think the Bank of England is losing its credibility in quite a dramatic fashion. In other news, keeping with the UK, we had UK data come out today, and it shows that the UK is indeed on a brink of a recession. Don't forget, the Bank of England forecasts 2 months ago, they forecasted that the UK will fall into recession by the end of this year. But it's now apparent that the UK is actually on the brink at this very moment in time, as UK GDP was announced at negative 0.3% versus 0% expected. And worse than that, the previous reading, was downgraded to 0.1% from 0.2%. So there is real keen signs that the UK is literally on the edge, and it's not helping with this confusion from the Bank of England today and this lack of credibility. But anyway, let's have a quick look at the sterling, see how the sterling is doing. And like I say, this has been a really, really choppy session so far for the pound because, it came under a lot of pressure. Actually traded just around the 1.0945 level today. But then obviously that report from the Financial Times gave it a little bit of a boost. And then what we had obviously had the spokesman today from the Bank of England saying this, the bond program is definitely going to be cut today. And it gave it a bit of a, even though they said that, it gave it a bit of a boost. So like I said, I think the market itself is thinking that the BOE, even though what the BOE is saying, will continue. So it's very, 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 very choppy at the moment. There's a tiny little bit of potential area of resistance or potential area of interest around 1.10607. But today is going to be a very choppy session for the sterling, I'm expecting. I'm expecting the trading between a range between 1.060 and 1.0954 potentially. So this is a very, very choppy session. If you look at the euro sterling as well, of course, obviously we had a little bit of euro weakness because obviously people started to think indeed the Bank of England are going to continue its bond buying program. Hey to you too. I hope you're well and having a good day. I really do. So yeah, but like I say, currently trading at 0.8972. If we look at on a longer time frame, look at the daily, like I always like to do. Again, like I say, we've had a couple of trading sessions of euro strength against the sterling, but again, this general confusion with the Bank of England is making it a very choppy market today for the sterling. Very, very choppy market. Moving on to something else. Another central bank as well. Bank of Japan has warned the markets once again that it might intervene in the FX market once again. The dollar yen has risen to a new 24-year high. In fact, the Chief Cabinet Secretary, I hope I say that, Hazuku Matsu, has said, we are closely watching foreign exchange moves with a high sense of urgency and ready to take appropriate steps on excessive moves. So again, they are warning that they might intervene once again. But don't forget that last intervention did spike down, weakened the dollar. But again, obviously, then the uptrend continued. But let's have a quick look at the dollar yen, and then we'll have a look at some other pairs as well in the market, what's going on. So let's look at the dollar yen first. Okay, as you can see, it still maintains that uptrend quite, for the time being. Anyway, it is trading around these levels now, currently trading at 146.27. These were the sort of levels last time that Bank of Japan did jump in. But there is questions whether they will do so this time. But for now, anyway, dollar yen traders, as in with all currency traders, be aware that they might intervene. So be cautious. So make sure that you've got the appropriate stop losses and obviously risk management in place, because it is extremely choppy at the moment. And so, like I say, there is a high risk that they could do intervention, but there is also a high risk that they may not. They might just be trying to warn the market. That's all. So be very, very cautious. Euro dollar. Again, it's had several trading sessions of losses, been pretty sort of range bound at the moment, mainly because I think with this particular pair, and like with most pairs, unlike the sterling today, which has been driven by the Bank of England, most pairs are waiting for the big event happening later, a big event happening tomorrow. So currently trading at the moment, 0.9717. We look at gold, as we always do, because I am a gold bug, still hovering around, this is on the daily chart, don't forget, hovering around this key potential area of interest of $1,667.86. Pretty much like the euro at the moment. It's pretty sort of tight. Again, I do think that this particular the yellow metal is indeed waiting for obviously the CPI tomorrow. So that's how the market is currently at the moment. Up next, we have another event to come, which could, again, potentially be a very big event. And that is, of course, the FOMC minutes. I don't think, in my personal opinion, I don't think this is going to be as big as the CPI tomorrow. However, I do think the minutes, it's going to be quite fascinating to see if the Fed, what hints the Fed gives about their attitude to the current economic climate of the US and how much they're committed to getting inflation down to their target of 2%. Now, the market is sort of pricing in, and this is November, is when they do their next interest rate meeting. The market is pricing in a 92% chance of a 75 basic point rate hike in November. Will the minutes give us any more clues of it being, in fact, 75. I think it's pretty much assumed it's going to be 75. The only real risk of it not being 75 is if that CPI reading comes in really, really hot tomorrow. If it comes in hot, then the market potentially might start thinking they could be even more aggressive to get it down. If it's lower, then the market will probably still say, yep, they're doing 75 because it's working. But anyway, we have to see. It's all on the pretty much on a knife's edge for that. So the FOMC minutes tonight at 6 p.m. UTC. Sometimes I do a late night video on this one to cover it. But like I say, it's the minutes. So really it will take a while for the market. Sometimes it does take the market to digest what this 14-page document says before the market decides on what the direction it will go. So anyway, that's the minutes at 6 p.m. UTC tonight. So that's the big one for today anyway. But rest of this week, like I said, FOMC minutes tonight, German CPI tomorrow. But the real big one, the one I think the market is really holding its breath for and waiting for, is the US CPI, which is tomorrow at 12:30 p.m. UTC, because I potentially think this could be a really big event. I will be doing a watch along at this event, starting, of course, as normal, 12:20 p.m., 10 minutes before the event, so we can have a little chat about it, discuss it, look at potential scenarios, and do the build up for it. So that's at 12:20 p.m. UTC. Like I said, the market is waiting for this event. Last time, on the 13th of September, when this announcement came out, and it came out higher than anticipated, the market went through a shockwave. So will we see potentially the same effect again? All depends on the reading. But this is going to be the big event. So please come along and join me for the watch along for that. Other things coming up this week as well, which is, I think, will take more center stage later, is obviously earnings. We've got some big banks, JP Morgan, Wells Fargo, Morgan Stanley, and Citigroup announcing their earning report on Friday. So this is the start of the earnings season. It's really going to start to kick off. The market, as it currently stands, the FTSE in the red, negative 0.07%. DAX currently trading in the green at 0.02%. And US Stock 50 currently trading slightly in the green, 0.03%. But at the moment, it's all about the sterling, and it's all about the UK, and it's all about UK bonds. Extremely choppy market today. And of course, it's all about the anticipation whether or not the BOE, Bank of Japan, will intervene again. So that's where we're all at this moment and time. Don't forget, you can ask me questions anytime you wish, or simply say hello, or share with me your opinion, what you think is happening. What do you think about the Bank of England? Have they lost credibility? I mean, it seems to me that, this is the time. These are the times when you need stability. These are the times when you need the central bank to grab everything by the scruff of the neck and say, don't worry, we've got this. We've got this. Oh, brilliant. Thank you very much. Very kind of you. Thank you. It's just, thank you very much. I really appreciate it. It's just it's obviously an overview and a chat about it, but I thank you very much. I really appreciate that comment. It's really nice of you. Thank you. Thank you very much. But yeah, like I say, these are live broadcasts, obviously, for questions and for people to chat about it. And to share opinions, obviously, because, everybody has an opinion on the market, and nobody knows for certain what will happen, because obviously trading is not that easy. This is why I always suggest, obviously, strict risk management as well when it comes to trading. But thank you for that very nice comment. Don't forget, if you think of a question later, you can put it in the comment section on Facebook and YouTube. I will see them, and I will reply to it next time I go live on air. In fact, I do have to reply to, I believe it's a John Dole or John Knoll. He says hello. He said hello a couple of times in the comments. So hello to you, John. I hope you're well, and I hope your family are well. It's a question. Yeah, Bank of England, UK government really do need to work together. This is what the IMF has said. IMF has said. They have said, look at that. I know you were trying to put the IMF have said they approve of the UK government releasing its budget plan and how it's going to pay for it early. Originally, they were going to release all that information in November after the Bank of England. They've moved it forward now to the 31st of October before the Bank of England makes its decision, so Bank of England can look at it and base its decision on that. So that is proper. That's more cooperation. And the IMF has said that's a good idea, and they have encouraged the Bank of England to work with the UK, because the UK government, because the UK government, their credibility is out the window at the moment, and the Bank of England is going that way. So that's when they need to be careful. So they need to be working together, or showing they're working together, for the market to feel safe and stable. Not that the market's ever safe, because it's not, but for the market to feel a bit more stable and a little bit more confidence that they're in good hands at the moment. But that's a good point. Like I say, yes, so there is always a chance to put comments in the comment section on Facebook and YouTube as well. Okie doke. If there is no more questions, and thank you very much for SMF 790 for that question and that opinion. Very much thank you for MCJ Bell, I think it is, for that lovely comment you made as well. I really, really appreciate that. I really do. So anyway, if there is no more questions, not a problem. Don't forget, if you're watching me on Facebook and you've liked this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like, hit the notification button so you know next time when I'm going live. If you enjoyed this video, found it interesting and useful, and you put up with me, by all means, give me one of those. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.